Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey there, trader and investor friends, checking in on the market. So we got the all-time high. We knew it was the most likely scenario thanks to trends, keeping the uptrend. New daily higher low for SPY is going to be 290.73. Anything above 290.73 keeps the bulls in full control. I have no interest bearish as long as the daily uptrend is intact. That being said, I wouldn't be surprised to lose the daily uptrend sometime in the near-term future. I'm not going to try and guess the top, but I'm going to be prepared for that scenario. The reason being, number one, the weekly time frame certainly extended over the last 4 or 5 weeks to the upside. We've got the FOMC on Wednesday to be watching. Earnings season is winding down a bit, and it's just the kind of scenario where we get a pullback every now and again. So looking at IWM, daily continuation for the higher low and higher high here as well. Anything above 155.47 keeps the daily higher low pattern intact. 159.50 was the high of 2019. We did break it. Not by a ton, so the bulls want to see a bit more follow through, because if we were to lose the daily higher low pattern from here, I would call that a double top at resistance. So bulls want to see a clear break to ensure that can't be a double top and that the weekly time frame gets that clear continuation. QQQ tech sector, all-time high was 191.22. We broke that by 10 pennies. Not a whole lot going on for the tech sector today, and we had some individual names with some nice action. Google had a bearish reaction to earnings after hours. Apple earnings are tomorrow, and that will pretty much wrap up the tech sector. Let's see what we did after hours on QQQ. There's the drop with Google, and we were down at 189.72. So we're anticipating a lower high, or a lower open, I should say, is likely. We've got support short term of 188.59, and if the bulls lose that level, we zoom out to the weekly chart, and weekly consolidation will be underway. And again, just like SPY, certainly due, look at that chart, certainly due for consolidation. One red week mixed in here as far as a close lower than where we opened over the last 4+ months, 4.5 months. Pretty wild. XLF breakout. A lot of the strength of the S&P 500 today was on the back of XLF. The RSI on the daily time frame over 70. Look, when the last time the daily RSI was over 70 on XLF, it was back at the all-time high back in January of 2018. So significant follow through. Anything above 27.20 is a daily higher low, keeping the bulls in full control. And the next resistance level that we're going to be looking at up in this range is 28.35. And of course, the FOMC on Wednesday is going to have a significant impact on the financial sector, on gold, on the dollar. Those are the things we're going to be watching the most. Biotech sector, topping out a little bit. So we have a higher low at 84.75. Anything above that keeps that little higher low. But keeping in mind, we are looking for a top to be set from this bounce and likely going to set a lower high. So looking at it for XLV, it's a little bit more clear because we're a little bit more extended. High before the dump, low of the dump, and we are scouting a lower high and then a higher low and an equilibrium. Have to lose the low of today at 88.47 for us to be confident that our daily lower high has been set and that we need to form that higher low. So watching for that weakness, that could be a catalyst for the S&P 500 to potentially consolidate if we do see the biotech and healthcare sector pull back a bit. Last time we saw this dump, the other sectors, the financial and tech sector, picked up the slack. And if that doesn't happen this time around, it could have more of a negative impact on the S&P 500. VIX here on the daily chart still holding on really well. And again, we are a daily inside bar. So even though SPY is marching higher, the VIX here is sitting tight. And we're still going to watch this pattern, drawn it a couple times in the past week or two, where we have a potential falling wedge. All depends on how you draw your trend lines. I draw them so no candlesticks close above resistance, no candlesticks close below support. And I'd be watching that pattern right there. And it does look like heading into Wednesday could potentially lead to a break of this range. But if we keep tight ranges, we could stay within this for another week or so. But it is something I'm keeping an eye on because we know the S&P 500 is due to see some consolidation. That could be a scenario where we do get a bull break on this daily time frame for the volatility index. Skipped oil. Oil had the major pullback and loss of the daily uptrend. We have seen a bounce. The oversold bounce did play out. We got a daily inside bar with today's trading action, but I want to know the 4-hour time frame for perspective. We can see that we haven't really made any kind of major shift. I would say that anything under 65.05 is a 4-hour lower high. And at this point, that's the scenario that we're looking for. And even on the daily, we are just looking for a daily lower high to form, keeping in mind that if we see a lower high and lower low on the daily, that's going to confirm our downtrend. We have lost the uptrend at this point, but we're not in a downtrend. I need that lower high and lower low to change that trend and confirm the downtrend. If that were to happen, that would add some downward pressure on the S&P 500 as well. So biotech sector pulling back, healthcare sector with that lower high, and oil confirming the daily downtrend is a scenario that I would foresee weekly consolidation occurring for the S&P 500. Natural gas bounce still playing out. Daily inside bar today, but we're still right up near that resistance. If we lose the higher low pattern on the 4-hour, we're going to be looking at the need for a daily higher low to form. So here's our range right now. If we set this lower high and pull back, we'll have a 4-hour equilibrium heading into tomorrow morning. If the 4-hour equilibrium were to break bearish, the daily time frame has to pull back and form a higher low compared to 2442. And then we would have to change the daily trend. So still a ways to go for the bulls. They're holding up well and they had some nice bull volume, but we need that daily trend change to believe the bulls because they certainly haven't proven much over the last bunch of months. That's where we stand overall. Again, no sign of weakness in the S&P 500, but we know it's going to happen at some point. Not trying to time the top, looking for signs of weakness on the individual puzzle pieces that make up the S&P 500 and the market as a whole. Oil, daily downtrend confirmed, and the healthcare sector in that equilibrium forming a lower high would be two scenarios to be watching for SPY to potentially lose the daily uptrend. Until that happens, we're looking at all-time highs, and we'll see if we can continue on this path that we've been on for quite some time. Remember that 4-hour equilibrium way back here at the end of March? That led to a month massive bull run. Pretty cool. See you soon. No end of the video here. Stuff today. Made a bid on a mini farm, and hopefully it's going to go through, which means in the near-term future, I'll have a whole bunch more end-of-video content to go over as far as establishing a homestead, incorporating permaculture skills and setups. It's got a barn for the goats and a coop for the chickens and a pond for the ducks. We'll see. Thanks for tuning in. We'll see you soon.